In this video, traders, we're going to look at using the line of least resistance to your advantage. Stay tuned. Hey traders, very warm welcome to you. All right, so using the line of least resistance to your advantage, there's a little paragraph from Reminiscences of a stock operator. If you haven't read it yet, I thoroughly recommend it. This is one version. There's multiple different versions, but super cheap on Amazon, 10 quid or something, 10 bucks, wherever you are. Well worth a read. More of a storybook about a speculator called Jesse Livermore, and super interesting lessons in all of it. Now, I've done a video where I've kind of said, hey, you know what, we probably shouldn't aspire to be like Jesse Livermore, because at the end of the day, I won't spoil the book, but you know, it didn't end well for him. However, you know, he has some really good things to say, and his experiences have made a lot of money, lost a lot of money, didn't manage to keep it. So I don't think we should put him on too high of a pedestal. But at the end of the day, there's a lot of things in here which are useful, little context. And one of the things he said, which kind of got me thinking about this line of least resistance. Specifically at the moment, you know, tech stocks are just going high. As I'm filming this, that's the way it is. Maybe changing when you're watching this. Maybe there's a line of least resistance in the market you're trading. Currency pair, commodity, stock, whatever. And the thing is, we as traders, we try to overcomplicate things. You know, we try to say, oh, is there a double top there? Oh, is there a reversal pattern there? Oh, is there this? And there may well be. But the line of least resistance, if it's been going up for the past 3 months, is probably going to be up. And if we don't align ourselves with that, you know, we can get into trouble. And there's a kind of brief extract here that I'll just talk about. Jesse Livermore, I'm not going to say it word for word. I'll paraphrase it slightly. You know, he was making money on stocks. He made some money on stocks, but he also shorts cotton. And at one point in time, he had a loss of $250,000, which back then was pretty hefty on 500 or 50,000 bales. And he didn't cover, and he kept saying to himself, you know what, I'll wait for a reaction to cover. So if you can imagine this on a chart, pretty standard uptrend stuff, right? You've got the market pushing higher and higher. He's short from, let's say, down here. It starts to come down a bit. Every time it starts to come down, it goes higher. And this is how we trap shorts in other stocks and other markets, guys. You know, he was trapped short on this. He fully admits it. You know, every time it went lower, it would find a bid. It would find a bid. So it never went low enough for him to cover. He was happy to take a loss on it. It just kept going lower. And of course, what happened is it kept going higher and higher and higher. And he said, you know, I'll wait for a reaction to cover. The price will react a little bit before I could decide to take my loss and cover. Imagine if you're short here, you think a little bit more, it shoots back up again. This is we've probably all been there, guys. You've probably all been in a situation where you've done this, whether you're intraday, swing trade or whatever. You've been in a position, it's going against you, want a little reaction to get out, then just snaps back like, you know, wait for it to come back. And he said he'd wait for a little bit. His attention was drawn to his stock deal, and he went away on holiday, etc., etc., etc. So he basically was completely against the line of least resistance. You know, this market was going higher and higher and higher and higher. And as we talk about a lot in price action, because Jesse Livermore was really tape reader price action, the same kind of thing, you know, tape reading price action of very, very similar. Some people think tape reading is a shorter term stuff, but you know, we're still looking and seeing what price is trying to tell us. And in this instance, price was saying, hey, listen, every time we pull back, buyers step up. And don't forget, there'll be weaker shorts other than him who will be just literally panicking and buying and buying. So you get this kind of flow as money coming in. You get shorts that are wrong, who are getting hammered and are getting out and getting squeezed. And that's why you get this trend, consistency of trend. And you know, ultimately Jesse Livermore said, hey, you know what, I ended up covering it. I took $1 million loss at some point. He realized he was wrong. He said, you know, the price was just constantly going higher. So he covered his position. However, he said that once he covered his position, took his $1 million loss, he'd forgotten about it. He said, you know what, I've paid my price for it. It is what it is, blah, 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 etc. Now, this is where it gets interesting. He then drove over to New York, had a look at price, and price had now started to come down again. Now, this is where he starts to look at it from a tape reader price action perspective rather than a technical perspective. This is where we have our edge, guys. If you're a price action trader, tape reader is where you have your edge. This is no different to any of these. And the expectation is it goes higher. And this is what he said. He said here, listen, now the price had gone down, but there was no rally. You know, in other words, you know, the price had gone a lot lower. And I also noticed it had not rallied as it had been in the habit of doing so for weeks. As soon as the pressure of the particular selling that had depressed it eased up. In other words, Normally you get the pressure would sell, you get a little bit of pressure, and then as soon as that eased up, bang, it would pop back up again, just as we talked about. In this instance, it hadn't, and so he decided then to put his short line on. He added to his short as it was going lower and lower and lower and lower. Fine. So the point is, guys, there's two things here. One is using the least line of resistance to your advantage. If the market is just continuing to go higher and higher and higher, and he admits here, he made a mistake, you know, you made $1 million loss on that when you shouldn't have. The line of least resistance was very simple. It kept pushing higher. Every time it dipped lower, it would go higher. Just look now at the current charts when I'm filming this, guys. Every time the market dips lower, tech, especially US tech, it goes higher straight away. Lower, goes higher. There'll be hundreds of stocks that are doing that. I'm sure there are commodities going to do that in the future. The stocks, markets do that all the time. Lower, higher. It's the line of least resistance. And so when you're in a situation where there's an obvious trend play, it makes sense to try to align yourself with that as much as possible. At the very least, don't fight it. Jesse Livermore admitted he made a mistake there. Fortunately, when the transition happened and he recognized that actually now we're not finding buyers coming in as soon as it's depressed, now we're not finding that continued bid after it's dipped lower, things might have changed. That's when he took a short, that's when he made all his money back on his cotton deal with that trade. So that's a very specific example, but you get the idea. We've all been in this situation where we've probably fought the trend too much, or we've probably tried to overcomplicate something. Now, I'm not saying just buy and hope the thing goes up, but if the price has been going up and up and up and up, then play the game. When there's a dip and pullback, buy it, put a stop below. If the price has been going lower and lower and lower, and that seems to be every time it rallies, it gets crushed, keep playing it until that doesn't happen. And obviously use stops to manage your risk, etc. When you start to see things like this, okay, prices dip back, but we haven't seen a bid come in. We haven't. Maybe things have changed. Maybe, you know, that's reading into things a little bit more. Now, technical analysis among you will go, right, well, it's a channel break, it's this. And that's where technical analysis comes from. It comes from the roots of tape reading and price action, of saying, hey, when we get a dip, when we get a discount in price, no buyers are stepping up. So the assumption is that perhaps buyers aren't as keen as they were. Let's see how low this goes before they get keen. And generally speaking, we'll probably get this type of thing, don't we? And then it rolls over because we get some buyers that are still late to the party that come in. And not always, you know, charts are always unique and different. But anyway, guys, line of least resistance, well worth thinking about, taking it back to simplicity and going, you know what, what's happening? What's the price telling me? Price is telling me that it's going up or it's going down or it's just stagnating. So why don't I align myself with that and not lose $1 million like Jesse Livermore did in his cotton trade? Anyway, guys, take care. See you next one. Bye-bye.